Hey guys, this is Vince with Green Joe Coffee School again. We help people get into mobile coffee businesses, carts, trucks, and trailers. So this video is a video part of our cost of goods series. We have a class, the Mobile Coffee Accelerator, and one of the chapters is on running your numbers. And so we have this big calculator that we're using to help kind of run the numbers. And this video kind of breaks down one of those sections. And so it's just a good video for everybody to look at. So we have it here. Anyways, so this particular video is on monthly profit. So it's calculating your monthly profit. And mobile coffee is really interesting because typically you can have two different sources of revenue. One of those sources is what I call retail. That's when you're doing things like a stationary setup or a 5K and you're kind of selling to the public. The other source of revenue with mobile is catering. And so catering is where you sell batches of coffee to one person and then you go and serve that to their people, whoever that is. Like a good example of that is if the PTA was to purchase coffee for the teachers, right? So you have two different sources of income. And because of those two different sources of income, they can kind of generate their own revenue. And so really you need to keep track of them separately because your retail cost versus your your retail revenue versus your catering revenue, both you want to know which ones are growing so that you can kind of put more time into that specific thing. But also each one's going to have a little bit slightly different cost of goods. And so we want to just kind of keep track of our margins and make sure that, we're making some money. So when you're looking at your monthly profit, what I like to do is I like to break it up from retail revenue and then catering revenue. And when I talk revenue, I'm just talking gross revenue. Everything that came in. When they wrote the check, how much was it for? Not subtracting any of our cost of goods, not subtracting any of our monthly expenses. Like what's the money coming into the account? Cool. Then from there, I will subtract my cost of goods. And again, because catering cost of goods and retail cost of goods can sometimes be different, I like to keep track of those separately. And that's going to give me basically my gross profit. And with my gross profit, I can now take those numbers and subtract my monthly expenses. Now, the way we set it up in the calculator, and you can set up however you want, but I like to put my monthly expenses that are static, I'm paying the same amount of commissary rent every month at the top, and the ones that are variable down at the bottom. And just a little 2 cents, being in business for a few years now, you kind of learn these little tricks. The way I set mine up is I look at my number one deductions at the end of the year, and I like to use those as my categories for monthly expenses. So when I'm tracking my monthly expenses, I'm also tracking my deductions. I mean, they're the same thing, but it just makes it a little bit easier to transition over when it comes to tax time. So that's how we set that up. Anyway, so you got your gross profit, you minus your expenses, and then ta-da, you have your net. And so that way, when you have your net, you can figure out kind of what your margins are, how much you're essentially making in actual money, what you're taking home. And those are great numbers to know. So anyway, so that's the last part of this particular video series that we went over. We did, if you haven't caught up to it, there's some other videos on breaking down the ingredients, breaking down the drinks, the catering revenue, and then of course now we've gotten into monthly profit. And so essentially, if you're setting all this up, you'll first break down your ingredients, what you're paying for your ingredients, and how much you're paying per serving for those ingredients that go into the cup. Blah, that's a mouthful. And then from there, you can say, okay, well, this is what the drink, the drink has this many ingredients or these different ingredients to make this drink. So this is how much this drink's cost me. And that's pretty intuitive, right? And so now at least you know what your cost of goods are on that drink. I got to be a little bit, I'm bending some rules here. I really am. One of the rules that I'm bending is I'm a little bit liberal with the concept of cost of goods labor. And the reason for that is in the beginning, a lot of folks are really just kind of paying themselves, they're kind of creating a job for themselves. Now, eventually when you go to scale the business, then you'll need to really start paying attention to labor cost. In the catering section of this video series, I talked about that. But in the beginning, I don't add that labor in right away because most of us are just solo entrepreneurs and we're trying to just figure out how much money we're going to make. So I left that out on purpose because of the environment, because of the folks that I work with. But anyways, that. So yeah, so once you have, the ingredients, then you can then you can say, okay, well, this many ingredients goes into the drink, then you know how much the drink cost you, and then you can mark it up, and now you know how much you're gonna make. And then you can add up all those at the end of the month and be like, I sold this many of those drinks, but then I had to pay these bills. So, this many drinks sold, these bills paid, this is the amount of money left in my pocket. So that's all in the calculator in the Mobile Coffee Accelerator if you want to just skip ahead and not go through the headache. But if not, you want to go through the headache, hats off to you, good for you. My name is Vincent. This is Green Joe Coffee School, and the website is greenjoecoffeeschool.com. So thanks for tuning in.